Get Rich Slow with John Wolf. Hey, today I want to tell you about how I bought my first house and how it was a home which most lenders and most people would just assume it would be auction, cash only buyer, no way to do it with a normal home loan, much less a low interest, zero down, imaginary down payment home loan. So if you're interested, please smash that like button, subscribe, and if you want my help doing your home loan, reach out to me. I'd love to help you. So this was 2017, and I found out about a house where somebody was in trouble. They had become partially paralyzed a bit before, and they could not make their mortgage payment because their business basically collapsed with them unable to work. Super, super sad. But anyways, about the home. So I went and took a look at this home, and it was in a decent neighborhood in Southeast Portland, and it was in rough shape. I mean, the roof had failed, and by the roof had failed, I mean there were no ceilings in 2 rooms. And this is an old house, lath and plaster. It takes a lot of water to make that happen. One of the owners was a hoarder, so there was just stuff floor to ceiling, and this house has really nice 9-foot ceilings. There were obviously rats, and by obviously there were rats, I mean I stepped on several rat corpses just walking around the house. It smelled awful because of cats and dogs, and it was in rough shape, right? So how on earth was I able to get a normal home loan on that? Well, here's basically the process. So the home hadn't been foreclosed on yet, but it was starting the foreclosure proceedings, and it was still owned by the owner. So that's really important because none of this works if it's actually already a bank-owned property. The second piece of getting, normal conventional financing on something like this is you have to, according to the appraisal, make it livable. And there's a decent amount of skewing that could be in the whole livability thing. So basically, I got pre-qualified for myself. This was actually the third lender I talked to. The first 2 lenders were uninterested in helping me, which is actually, you're not supposed to do that. So shame on you, Advantis. But anyways, I found a loan officer who's actually brought me into the business, and now I'm doing the same thing. And I got qualified. I had money to put down. I did have a good, stable job, and I did have good credit. So that helped a lot. So here's how that works. So so what happened is we had the appraiser come in, and she did not like being there. It was kind of funny. I didn't like being there, and that's the kind of house that you should wear a respirator in. And she went through, and I think that she pointed out, oh gosh, it must have been 18 or more, complete stop sale health and safety violations. And it was like, there's something wrong with the roof. There aren't ceilings in a couple rooms. There's obviously a rodent infestation. There is holes in the walls with wiring poking out. There's a couple broken windows. And I think she made a note about like rot, maybe. So anyway, so we get that appraisal, and it did give a value of the house that was higher than I had already agreed with the seller that they were going to be happy with. So that was good, and it was decently higher. And so we went through, and just every single item on the checklist, we specifically took care of that, with a few exceptions. So, holes in the wall, you can get those solid outlet covers, and double-sided tape, boop, holes in the wall, done. Broken window, it's really easy to fix a window. The replacing the ceilings, the rats, and the roof are not things that can be done instantly. So we did what's called a lender holdback. And in order to do this, you have to be buying a home where the agreed upon price is substantially lower than the appraised value for this to work at all. But anyways, basically, got quotes for all those things. So I got quote from a rat and rock guy. I got quotes from a sheetrock guy. I got quotes from a roofing guy, and they basically did the home loan as if 125% of those costs were going to be taken out on the loan. And, we adjusted the sales price accordingly, basically. And any of the extra money from after that actually went to the seller, which was fine. I think that I only ended up exceeding the quotes for everything by like $1,000. So the seller got a nice check later. And it was a slog. So, I got that done. So there was still awful all over the house, and there was still things wrong, but every named item on the checklist was either going to get done after closing or it had been taken care of now. Smoke detectors and water heater straps are always the bane of my existence. But yeah, there has to be smoke detectors in the right places, and the water heater has to have straps. But anyways, we did that, and then we closed on the home, and I immediately went and got a home equity line because I put imaginary 20% down on this transaction, which I can't describe to you exactly how to do that, because if you don't do it right, it'll be pretty bad for you. And it only works in these situations, again, where you are buying the house because it's a distressed property for a lot less than it would sell for if it was even just in okay condition. But anyways, moving on from there, once it was my house, I got a bunch of workers to come help me, and we removed 130 yards of waste from the property because of the hoarder stacked up and everything. But now I own a home. I think that I'm only about $276,000 into that home. And when I got a newer appraisal a little while later, about a year ago now, the assessed value of the house was $460,000. I think that might be more than it's really worth, to be honest with you. And however, I am planning on a major remodel, gonna take it from a 3 big bedrooms, 1 tiny bedroom, 1 bath to a 3 big bedrooms, 2 bath, remodel the kitchen, add laundry facilities on the upstairs, and all that good stuff. Probably a little bit less than $100,000. And then I fully expect this house to sell from, somewhere between 500 and 680 with how things are going on in the market now, which would just be a phenomenal gain. So anyways, if you are willing to do what other people aren't willing to do, you can get gains more than what other people are getting. Now, I put a lot of work in, sweat equity to make that happen. And jumping into this was at pretty considerable risk, because before it was my house, I was going around fixing a bunch of things at my own expense. Additionally, this would have been crazy if I didn't actually have from my family the ability to put 20% down in the first place. We didn't put 20% down on the loan, but that money gave me the security to work on the house and live somewhere else while the house was being worked on, which did take quite a while to make it really livable. And that's where we are today. So anyways, I hope you enjoyed that story. Smash that like button, subscribe if you haven't already. And if you're interested in doing a home loan, maybe you want a little bit less creative than that, or you need to refinance in Oregon or Washington, please reach out to me. Have an awesome day. Bye.